Hello, I'm David Cassidy with the midweek market update, Wednesday the 16th of September. Global equity markets have got off to a reasonable start this week, helped by news that AstraZeneca had resumed UK clinical trials of its coronavirus vaccine, while the US pharmaceutical company Pfizer said that their coronavirus vaccine could be viable by the end of October and distributed within the US by the year end. Also helping equity market confidence has been economic data releases from China, which have come in stronger than economists expected. The highlights to us include industrial production, which grew by 5.6% in August, up from 4.8% in July, and against estimates of 5.1%, and retail sales, which grew by 0.5% in August, its first positive reading since the coronavirus outbreak. UK employment data, which showed unemployment increased from 3.9% to 4.1%, unfortunately continues to be fairly meaningless, given it is being distorted by the government's job retention, also known as furlough scheme. US equities have had a particularly strong few days following a brutal 2 weeks of falls, which supports our previous statement that this was simply profit-taking in a handful of heavy-weighted technology stocks that has now by and large run its course, rather than a sinister erosion of confidence. For example, Tesla, which was at the epicenter of last week's sell-offs, closed over 12.5% higher on Monday. Japanese equities have also been helped by confirmation that Yoshihide Suga will become Japan's next Prime Minister after Shinzo Abe stepped down due to poor health. Consequently, we expect a relatively seamless transition, as he has already pledged to continue the current ultra-loose monetary policy. Although we have had a relatively quiet economic calendar so far this week, this is a big week for the key central banks, as we have policy meetings in the US, UK and Japan. The Fed's monetary policy announcement is first up today, the 16th of September at around 7 p.m. our time UK. This is then followed by the Bank of Japan and the Bank of England tomorrow, Thursday the 17th. Despite the fact that we aren't expecting any of the central banks to do anything to risk the current positive market sentiment, our ears will be pricked up ready to listen to their comments. For example, while we don't believe the Fed is likely to want to alter monetary policy ahead of the US presidential election, which is now less than 7 weeks away, we wouldn't be surprised if Jay Powell, the Fed chair, warns us that the US economic recovery is likely to slow down if Congress don't get on and agree a new US fiscal stimulus package to help those American workers that have been hard hit by the coronavirus outbreak and associated lockdowns. Likewise, the Bank of Japan may simply want to talk a good story to help support Yoshihide Suga. The Bank of England's decision is slightly more complicated given the increasingly uncertain backdrop as a result of renewed coronavirus restrictions, the ending of the government's job retention furlough scheme, and of course the souring Brexit negotiations. Although the Bank of England has so far resisted the temptation of taking interest rates below zero, a complete breakdown in Brexit negotiations will almost certainly result in negative interest rates. However, at this stage, we expect the Bank of England to simply signal that more quantitative easing, QE, could be on its way. Now, we will update you about these central bank policy meetings in our weekly market summary.